Bloomberg Audio Studios. Podcasts, radio, news.
Nerdfest, its single best idea. Today was absolutely extraordinary. Moody's cut the rating, whatever. It's old news now, coming out on Friday afternoon. And we decided, and Eric and the team were just brilliant on really taking a bond focus. What do bonds mean? The debt and the deficit. What do bonds mean for equities? What do they mean for currencies? What do they mean for commodities? It was just a fascinating Bond Geek Monday. Strong was George Bory at Allspring. He's got decades and decades of experience. And we talked to him about this partition between price decline of bills, notes, and bonds and yield increase.
The yield dominates in this environment. And even if bond yields, so if the 30-year were to go up to, say, 5.5%, which is not out of the realm of possibility, you're still looking at positive returns in bonds. And that's why year to date, bonds have done exactly what they're supposed to do. That income is carrying the day. Your sort of average, bond performance is up about 2% year to date. Not wildly exciting, but enough to beat cash and certainly enough to beat equities in a market where the market's trying to figure out what the growth trajectory is going to be on the back of tariffs. So what I tell investors, what I tell our investors is two things. One, income is your friend. Number two, diversify that duration and then let the bonds do their job. They're doing exactly what they're supposed to do. Income, coupon, compound through time. If I can compound my portfolio today at, say, 5 to 8%, depending on what kind of bond I buy, but if it's 5.5 to 6, I'm doing just fine. And just sort of, you can't ignore price changes in bonds. The price change only matters if you decide to sell it. If you hold on to the bond and you continue to compound, your performance and the return improves as you move through time. And that's the very powerful message in bonds.
George Bory, replay that if you'd like to. I think there's a lot of wisdom there. Mr. Bory is within Allspring. Dean Curnutt came in today. Just outstanding work at Macro Risk Advisors. It's very, very financy derivatives, all sorts of four-cross moments. It's a good place to mention that we protect the copyright of all of our guests. Get their research from them. A kind note, a kind email, a kind phone call. You'd be amazed how they'll give you a flavor of their genius. Dean Curnutt and I were talking about dollar dynamics, and that, of course, goes to my book of the summer in economics with Kenneth Rogoff, and that would be Our Dollar, Your Problem, vancing off of John Connolly from decades and decades ago. Dean Curnutt of MRI on Rogoff. So
Ken reached out to me on this book as well. I had him speak post the 2011 Eurozone crisis at a couple of events I hosted. Our dollar, your problem, our debt, our problem. And I think, so that's a little bit of a different take on it. I would say, up at 5.5%, 6%, the math of running the interest costs through that debt structure is just remarkably different. There's really no resemblance to the current structure of U.S. interest rates relative to when we took on all the debt in 2020, which, look, was an emergency. We were trying to push back against COVID. But I think the 10-year traded as low as 55 basis points. Into 2021, the 10-year yield was 1.2% at the lows. And so this bears no resemblance to that. And these interest costs are punishing. Tom, you have me on here to talk about the VIX, and whenever we talk about volatility, we talk about things like nonlinearity. And with regard to treasuries, I think that's a facet of the market that we typically wouldn't characterize as having a risk of, but things gradually then suddenly.
The most cautious I've ever heard Dean Curnutt, no question about that. Just a brilliant day. Really looking forward to the rest of the week. Quieter economic data this week, but lots of good conversation to be had. Across the nation on your commute, look to Android Auto. I'm looking at that every day, really improving the software capabilities of Android Auto, Apple CarPlay, all the other services as well. On YouTube, subscribe to Bloomberg Podcasts, and of course, out at YouTube. Podcasts, single best idea.